Okay, so today we're talking about business interruption insurance. Business interruption insurance exists to cover you against losses in profits and income from your business if something happens that's out of your control. So for example, if a fire tears through a warehouse and destroys merchandise, or if an earthquake causes your office building to be destroyed and forces you to relocate, if that disrupts income, profits from your business, business interruption insurance could kick in and make you whole. Now, keep in mind, it only covers you against things that are within your control. So if one of your top salespeople leaves, or it's just a bad season or an economic downturn or something like that, business interruption insurance is not meant to help you with those things. So there's two main types of business interruption insurance. The first is more common in production and manufacturing companies and will insure your profit stream against a covered peril. So what the insurance company does is they predict what your future profit stream will be based on what you've done in business over the last couple years. And if something happens that's a covered peril to interrupt that profit stream, the insurance policy will kick in and make you whole. The second type is an extra expense insurance. And this is more common in commercial enterprises like banks or professional services. And if something happens that would disrupt your business and cause your expenses to rise, like your office building burns down, you need to find an alternate location, you have to pay overtime, you have to pay travel expenses, your utilities might go up. That's when the second type of policy will kick in and make you whole. So when you go to buy business interruption insurance, it's actually done through your standard business owner's policy. Here in the US, it's not actually offered as a standalone product. But that's okay because most of your business owner's policies are pretty flexible and customizable, and there are a fair amount of carriers throughout the US that will offer them. Now, if you're really focused on minimizing costs, you're trying to reduce the premiums as far as you can, there are a few ways to do that. The first way that we always look at with insurance policies is you can increase your deductible. That's the amount that you pay out of pocket before the insurance company starts to reimburse you. The second is reducing the restoration period, which is the amount of time that the insurance company will reimburse you for either lost profits or increased expenses as a result of the covered peril. You can also play around with the exclusions. Government intervention is a pretty common exclusion. Also, cybersecurity is a pretty common one these days. You can either add or subtract that will affect the cost of the policy. Now, here's when you might want to consider business interruption insurance. If you're in an industry or you have a business that relies heavily on physical assets, or if you have a low profit margin just because of your business or because of the industry you're in, you probably want to look hard at a business interruption insurance policy to protect your income from some of these covered perils. Also, if you live in an area that's just prone to natural disaster, probably a good idea to at least explore the option. For example, I live in California. Earthquakes are just something that we kind of have to live with in California. If you live on the Gulf Coast or in the Southeast, hurricanes are more probable to run through those areas. So if any of those things apply, it's probably a good idea to at least explore the idea further because it can be a great way to protect your income if the worst happens. If you haven't done so already, be sure to check out our short video series on 3 easy ways business owners can reduce taxes. Just click this link to watch.